When there's uncertainty in the market, investors turn to dividend paying companies as a reliable strategy to generate that passive income and, of course, enhance the portfolio. And in today's video, I am going to be talking about my favorite ETF, which is the Schwab U.S. Dividend Equity ETF, or the SCHD. Now, this is a tried and true, delivering very strong returns, even outperforming those S&P 500 funds for the last 5 years with a very executable and strong growth strategy, well-rounded, very well built income-based portfolio, which is the reason why personally I do carry it in my 3 ETF portfolio in a very big majority. Breaking this down, it is incredible to see what is coming with the stock split, which is coming on October 11th. But looking at the SCHD, now why is this such a big ETF? It really contains 2 things. One, quality of the companies that are invested in here. The second one, the growth of the companies that are invested in here as well. When you start thinking of long-term capital appreciation, the Dividend Exchange Traded Fund, this ETF specifically tracks the Dow Jones US Dividend 100, which includes 100 US-based companies that have a proven dividend profile, very strong fundamentals, and very strong balance sheets. That is something that really goes above and beyond with the SCHD, beyond just the dividend paying history and those companies. They are looking and breaking down the companies for financial health, not just the dividend payout. This includes strong balance sheets, dividend payout ratios, and a potential for earnings and dividends in the future. For example, when it comes to the SCHD, one of the big things they consider is the debt to equity ratio, the D&E ratio, which of course indicates the less resilience on borrowed funds, meaning that when rates do go up, money is a lot more expensive. As we've started to see a little bit of the depreciation with the Fed fund rates or the reduction, it makes money cheaper. It gives companies the ability to borrow. Now, when we start thinking of the ROE or the return on equity, this again is another thing that is a very positive signal for companies, meaning that dividends aren't going to be cut, the company's not going to go under, and of course, looking and minimizing risk. They do not want to cut dividends in the future because that could affect exactly what we're looking for in this ETF, which is that dividend growth. Now, when you look at the SCHD, also the diversification is across a lot of different sectors. It's not reliant on tech like we see with the S&P 500 or even the big growth like the VUG. It really looks at US large cap companies across all the diversification of different sectors and looking at that risk mitigation and companies that have paid dividends for an extended amount of time. Now, when we start breaking down the numbers, the historical performance, which of course is not indicative to what's coming in the future, but when you think of this ETF's legacy and how it is really performing, it is kind of crazy. So it's delivered an impressive 13.4% since inception, which is incredible, surpassing the S&P 500, which is roughly about 11%. So doing a little bit better, but also the track fund, and really during that time, they're using a well-executed investment strategy, emphasizing a dividend income and capital appreciation. This, of course, is where institutions have really started buying into the SCHD. Current dividend yield just north of 3%. So even thinking of inflation and the growth that we have in there, S&P 500 is about 1.3 when it comes to the dividend. So SCHD, of course, when it comes to dividend payout, is going to pay out considerably more. Very high position with a very low cost ratio of a 0.06, so a little bit higher than we see with that VOO, but only paying out a lot more. So when you think of the momentum of this ETF as well, new 52-week high, institutions started buying it, driving up the price, knowing that there is going to be that 3-to-1 split that we talked about on October 11th. This is going to make it more accessible to a broader range of investors, meaning more money could be flowing into this. And of course, they're expecting enhanced liquidity, so they're going to be able to move more units, making buying and selling shares easier, and of course, contributing to the increase in price in the future. Now, very interesting, when you start looking at the SCHD, you look at, the VYM, you look at a lot of the competitors. When it comes to an investment strategy, it really stands out in a crowd with dividend ETFs, which we know are all over, because many dividend yields either really chase the high dividend yield or they focus on undervalued companies, where the SCHD takes a very balanced approach with both the dividend yields and the value of the companies themselves, which a lot of people are almost saying that it's falling out of almost like a dividend paying ETF and into more of a growth and a value ETF. So it has a pretty unique blend and a combination of things in there that make it very, very important as a building block. Like I said earlier, 3 ETF portfolio. I have the VOO, which of course is that S&P 500, going to be a little bit kind of appreciated and a little bit segregated into all of the different sectors of the market. We're going to have it invested in everything. That is going to be the core ETF. When we start looking at the SCHD, this is going to be the dividend. This is not only going to be the dividend, as we can see right here, but there's also going to be a really big part of the growth aspect that we're seeing with this ETF itself. And the last one, of course, I do carry is the VUG, which is the growth aspect within the stock market. So it is a lot more heavily vested into that technology sector, meaning a lot more growth out of there when the tech is doing well. Now, the big things to remember with the VOO, it really has a big part in tech. So if tech is up, the VOO is doing incredibly well. If tech does pull back, if we do see a little bit of a pullback from the tech sector, the VOO and the VUG are going to be a lot more impacted when it comes to the impact of those tech sectors and the pullback. When we look at the SCHD with the passive income, the generation, the very well valued companies, the pullback is not there as much in the SCHD. You also do get the dividend return, but it is more appropriate into a lot of financial companies. I know Home Depot is one of the biggest holders that they do have. There are a lot of companies that do make up the SCHD that are the basics, that are the very strong stability companies within the United States, which makes a really, really big difference. So is it worth investing into it? My opinion, a lot of people are saying wait to buy it after it splits. My opinion, guys, go ahead and get into, and I think they set a deadline of, I think it was actually a couple weeks ago to go in, but do you buy it before the split? Do you buy it the night of? Because I know it said October 10th, they were going to do the split, and then the 11th, when the market opens, the split is going to be in there. So when you start comparing this to a lot of different ETFs, it is outperforming an incredible amount of ETFs, has a very solid strategy, has an impressive track record, low cost potential for income and growth, which makes it very, very strong for an investment vehicle. Actually, very simply put, if you put into 3 ETFs, that's all you have to do. Consistent contributions into an ETF that is broken into three ETFs in that portfolio can really make a big difference. Potentially higher returns with the split that is coming. And Schwab actually did this with a lot of different ETFs that they split a ton of them. Now, of course, do your own research. I always say this in all my videos. Before you start investing, know exactly what you're investing in. If you open an account up, which I have a link down below with M1 Finance, or anyone else through Robinhood, putting money into something like the SCHD is not always guaranteed, but it is a very strong bet in the right direction. And when you start looking at investing in the time frame, we're looking at 5+ years of investing. So again, when it comes to building wealth, when it comes to generation, it is consistently investing over an extended amount of time is going to generate wealth. And of course, with something like the SCHD, it does have the compounding the compounding factor of the income that is being generated from this ETF. All right, guys, so that is going to do it for today's video. Let me know in the comments what you guys think about the SCHD. And as always, thank you guys for watching.